Peter McGuire, CEO of XM Australia. Peter, once again, China seems to be coming up with really powerful numbers. We saw published this morning. The positive signs continue to encourage upward momentum. On mute there, Peter.
Good morning, Sean, and good morning to everyone across the globe. Yes, they certainly did. They've the growth numbers, we all understand that they're a fair way ahead of the curve compared to other nations battling COVID. I just noticed something as far as the Netherlands looking at a 6-week or 5-week lockdown. So China's certainly out of the blocks, and they're racing towards the finish line and performing very, very well. They're, as far as the equities are concerned, it was a mixed bag there. There was nothing, no strength really. It was a flat market there as far as Asia today, and certainly across China. So where it moves from here, do we continue that Christmas rally, Sean, or are we at year highs as we speak?
Peter, the particular issue of strengthening Yuan, is that something we need to be paying attention to? It's sort of long embedded now, and they haven't really taken any steps to correct it.
No, exactly right. Remembering, Sean, that for many commentators, I'll put my mind back to the likes of Jim Rogers, that has been saying that they've been undervalued for decades. So if you think about the big scheme or the big theme, it's been a very, very cheap currency for their own benefit for decades. And yes, while there's been some appreciation, and it's been a little bit noticeable over the last matter of 6 to 9 months, we've had a tremendous sell-off naturally with that US dollar down 13% from its highs that we experienced late March. And that softness continues to surprise. We're nearly, Sean, also at 100 yen for 100 cents US. We're only at about 104. So yes, I think that the yuan is possibly even more upside in 2021, but many analysts are saying that it's still very much undervalued.
Ed Bell, Senior Director, Market Economics at Emirates MBD. Ed, welcome back to the table. I'm wondering, Ed, as I think about the coming year, will the second half of 2020, do you think, look a lot like the first half of 2021?
Yeah, I mean, I myself into the reasonably bearish or less optimistic stance, but I think certainly the first quarter looks like we might see some hope for sluggish growth, countries and economies having to grapple with this on and off phase of lockdown conditions, kind of measures that we're seeing being imposed across a lot of European economies right now as they contend with quite virulent second waves of the COVID-19 pandemic, anxiety that we may need to see some of these restrictions being posed across the United States as well. So I think it's certainly helpful and welcome that vaccines are being deployed, at least at an emergency level at the moment, and that there will be more broad deployment of them throughout 2021 as a whole. But I don't think they're really going to be hitting the market in a meaningful way as far as economies go for the first 6 months of next year. So it may be sort of cold comfort to think that we have to endure another 4 to 6 months of this kind of slow on and off kind of behavior. But if it does mean that it gets us out better on the other side, it's probably all the better for it.
I mean, despite, Ed, the vaccine news, and of course we're now a month or so into the euphoria of that announcement, and now we're actually seeing, as they say, needles going into arms, if indeed it's only half a dozen so far, but nonetheless, we've crossed the Rubicon. But meanwhile, OPEC and IEA in before, but OPEC now yesterday indicating once again correcting downward the demand recovery for next year. They're sharing your bearish thoughts.
Yeah, I think they're really putting most of the recovery down to the second half of next year. So I think the report that we saw from OPEC yesterday, they were highlighting a lot of the uncertainty with respect to COVID-19 and what it's going to mean for oil consumption, particularly in the first quarter, which I think is really going to be quite crucial. That's when we are going to get an increase in production from the OPEC plus countries that they agreed at the start of this year, and we may see an increase marginally again in February and March if they feel demand conditions warrant it. But if we have these kind of fluctuating restrictions being posed across economies, there may not even be scope for them to be able to raise that output even at the marginal level that they're considering at the moment. So a little bit more of a, I think, a sobering outlook from OPEC yesterday, particularly considering that we're at 9-month highs in the oil price, at least for Brent.
Yeah, that didn't seem to be reflected, although one would say it was kind of reflected in their decision 2 weeks ago to proceed with some element of increase of supply in the first quarter. Peter, I wanted just to tackle a little bit this morning your views on where is the Belt Road Initiative right now, the infamous Chinese infrastructure project, campaign, call it what you will, foreign direct investment across. There was just a story overnight with, interestingly, the Pakistani army taking over the $60 billion budget for deployment of the BRI in Pakistan alone. Generally speaking, is this a significant factor across Asia?
Well, from a Chinese perspective, Sean, I think the only place they haven't put a Belt and Road or on a roadway to is the moon at the moment. That might be the next frontier. But yes, what you're looking as far as Pakistan, I feel as though that there'll be a lot of noses out of joint, not only from the COVID perspective, but over the next matter of a decade, and the realization very much so along ports, what happened, that Maldives mindset, what's happening in the South Pacific, and of course, Pakistan and certain other nations through that whole pathway into Europe and Africa, of course, maybe they're bitten off a bit too much here. I'm not sure whether you're going to see, and I just look at, I'm going to roll it across to where we're facing issues at the moment as far as our exports from Australia with coal, just, very much over the last matter of hours. But they could be, a very strong political powder keg that can create much angst. Their tentacles are all over the world. We understand that, and how they're being adopted and how they're being integrated. I'm not really sure whether it's going to be to China's benefit the long run. I think there could be a few road bumps, and major road bumps at that really become the main course of this. I mean,
one of the biggest issues, headlines at least, that has come out during the COVID 9 months has been the ability of the BRI countries to pay back their debts to China, and whether China would be forthcoming with debt forgiveness, as we've seen in the past from multilateral development agencies in the West. Chinese don't seem to be as willing to accommodate that. What's your read on the politics of that going forward?
Well, that doesn't surprise me. I mean, I think it'll be very much one-way traffic, and where it runs from there is there going to be a longer phase, in 10 to 20 years time, countries notice, and we're experiencing this in the South Pacific. They're bucking up and they're saying, well, look, countries like Nauru and so on that have been financially compromised, to put it mildly, and there's really no way out. So I'm not sure whether every country wants to adopt it. And whilst it might look a nice deal at the start, Sean, the realization, like anything, is that you've got to pay it back, and or they take some ownership. And I think and
interestingly, the Chinese have deployed a military capability in Djibouti, which will give them some kind of muscle on the continent of Africa. It'll be interesting to see how they actually use it. Ed, we have your Emirates MBD report on the Daily Digest today, and we referenced the Chinese numbers in the earlier segment with Peter. But you also had numbers out of Europe, which didn't look too bad, I thought, given everything that's going on there.
Yeah, I think what we're seeing in Europe and really across many of the other big developed markets is the sort of bifurcation in how economies are rapidly or are growing amid in the second half of the year, at least amid the COVID-19 pandemic, where the industrial side, the manufacturing side of economies, essentially areas where it's easier to do things like socially isolate or maybe run on reduced numbers, they're holding up reasonably well. Whereas the retail side of things, services sector, those are the ones that are really suffering and really dragging. We've seen this pretty much steady across the second half of 2020, where you get the monthly PMI figures coming out. The manufacturing is still holding up pretty good, even if services are really in some tough positions and may be in scope for even worse conditions going forward as more lockdowns get imposed.
I mean, we've had that incredible sort of Q3 bounce back where the V literally, did a massive recovery, but then Q4 has been somewhat sluggish. Potentially a double dip recession in Europe, maybe in America. We're coming to the end of the Q4. What do you think the macroeconomic sort of GDP headlines will be in a few weeks when we get those numbers?
I reckon we'd be seeing a pretty kind of flat quarter-on-quarter kind of levels, where some of that manufacturing, some of that industry is still holding up growth, but the retail side, particularly what we're seeing in, say, November to December, the current months, has really been dragging on growth and really putting downward pressure on a lot of economies. And I think that's why there is still so much pressure in what we saw last week with the agreement on the EU budget to get that done and get the emergency spending plans that they agreed early in the year deployed across the economy, and also the United States to get some form of this stimulus across the line. You know, we were a little skeptical that it was going to get agreed ahead of the election. It didn't. And I think it's really at this point now still tossing the buck between Republicans and the Democrats as to whether they can get some form of stimulus, or I really hasten to call it stimulus because I still think we're in the kind of support and repair phase of the kind of government spending rather than actually encouraging people to be going out and spending on new stuff, buying new cars, new purchases, going out and taking holidays at a time when we don't have the vaccine completely deployed and people still have got a lot of personal finances that they need to repair if they're out of work.
Peter, is the market still looking to that Washington? Oh, obviously, we saw the big bazooka finally land out of Europe over the weekend, but Washington struggling to get to that second stimulus. Is the market moved beyond that? Or are we still built? Is that still built in to where the pricing of the market's at the moment?
I think they're still waiting on it, Sean. I mean, you know, that euphoria, as you mentioned earlier, you know, the vaccine, the Dow is flatlined for the best part of a week, if not, you know, a little bit negative. So there's no uplift there, running into a Santa Claus rally. They're waiting for that to drop. Is it going to drop? The elections, you know, we heard that Biden's got the Electoral College over the line today, and Trump replaces the Attorney General. I mean, what is going on? And who he replaced it with, and his deputy. So yeah, that's an ongoing saga in itself. So until we get some sort of green light as far as what's happening domestically in the States, that would give us a better indication from, you know, to the assistance of Main Street, Sean.
I mean, it does feel to a certain extent that if and when it does come, it will not be of the velocity that the market, and from my assessment, has built into its expectation. When we were talking 2-3 trillion potential scale, now we're like down below $1 trillion. And I think so much really at this point still depends on what happens with this runoff election in Georgia. Let's go to the survey question just to get it in to set the tone in the room on the outlook. My sense, again, H1 21 will be a lot like H2 2020 when it comes to COVID disruption to economic recovery. One so-so quarter, the Q3 in 2020 was pretty so-so. It was pretty positive, I suppose, and one poor quarter, the fourth quarter. Will we have the same in H1 21, where we're going to have one poor quarter, the first one with the COVID raging in Europe and North America, and then a so-so quarter in Q2 when the vaccine starts to make inroads on its scale and allowing economies to recover? So that's my question. H1 21, a lot like H2 2020. Agree or disagree? I wanted to bring in Frank Kane into the conversation because one thing I've been struggling to get my handle on is what is the picture in the Gulf now? In Dubai, it kind of feels like everything is back to the roaring 20s or whatever the appropriate phrase is. Hotels are full, traffic jams are everywhere. Frank, what's your assessment? And Frank Kane, chief correspondent with the Arab News, largest English language daily in Saudi Arabia. Frank, what's your assessment of the kind of macro picture as we come to the end of the year in the Gulf?
Hi, Sean. Yeah, well, certainly Dubai looks to be roaring back, doesn't it? It's hard to find comparisons because you can't travel outside to Abu Dhabi, of course. We can't see what it's like down there. But I guess the anecdotal evidence is also pretty positive from Abu Dhabi. They are reopening over the next few weeks themselves. Dubai certainly is back. Hotels are full. Emirates say that they have record bookings. Well, a record compared to the really low levels earlier in the year. I guess, look, the big thing for the Gulf will be happening later on today. We'll get the Saudi budget will be officially announced. And I think a lot of tone will be taken from that, from what they say there. Of course.
Would we expect a kind of a oil price reference to what the budget will be based on?
No, they don't do that. They won't do that. No, but they will. They will certainly talk about oil, and they will outline, the carnage really that's happened in the oil industry this year, and the effect that it's had on Saudi government revenues, which are way down by about 30%, I believe. But we've and seen
that was already on top of a projected deficit even before revenues were down 30%.
Yeah, that's right. Yeah, and they are going to stick with what they announced in the pre-budget comment, which is a 7.5% cut in government spending in 21. There will be no news on VAT, I don't believe. Although they might say that they will review VAT once the pandemic is over. I don't know whether you noticed, Sean, but they kind of declared victory over the pandemic yesterday. The Ministry of Health said that cases were below the 150 a day new cases level, and that represented victory. So they certainly think that they're getting towards the end of it.
Well, it's victory, I suppose, while you still have your country locked down and locking everybody out. But do they? I mean, they have to reopen at some point. This economy has, at least its desired intention, 2030 vision, is to open up Saudi Arabia.
Yeah, that's right. Well, look, I mean, travel is possible to Saudi Arabia now. Colleagues of mine are, toing and froing to Riyadh, but it is selective. But I think from next month, from January, we will see quite a reopening of Saudi Arabia. They are still planning the FII conference, which was due to go ahead last October, was cancelled, and then slotted into the week where Davos normally happens very neatly. And that's still planned to go ahead as a mixture of physical and hybrid, hybrid virtual event. So
what about the Saudi story, rapprochement with Qatar? Is that getting much coverage in your newspaper? It seemed to be making some headlines a few weeks ago, but has faded away.
Yeah, Arab News has reflected the government line, as you would imagine, that there are certainly talks going on, and that there is some potential for doing a deal. I think a deal will happen, but it may be a rather more limited one than we had previously imagined. But certainly some kind of rapprochement.
Okay, well, thanks, Frank, for that. That's helpful. Thank you. Let's go to the survey result and bring Ed's view in on that. The survey answer is on the question of H121 looking a lot like H2 2020. 75% in this room at least agree with that statement. Ed, your thoughts on that, and what does it mean for the outlook for oil prices if indeed H2 and H1 look a lot like each other?
Yeah, I think it's important to reflect that, we've gotten up to $50 a barrel on the Brent price. It took 9 months to get there. And we got there with enormous amounts of production restraint, both from OPEC and severe cuts to production across sort of the market-oriented producers in places like the United States and Canada and elsewhere. Going into next year, we're already seeing, the production cuts being tapered from OPEC countries, and probably not going to expect to see much more in terms of downside moves in terms of production for the non-OPEC producers. So what does that mean for the oil market is that really the outlook is entirely contingent on how well demand is going to be performing. And if we have a really uncertain approach to where demand is, then we might be in a phase where $50 represents the top of the market for quite a prolonged period. And so we could be trading in that $40 to $50 kind of range for quite some time. I really would struggle to find the catalyst, even if we have the market still in a modest stock draw phase for the first half of 2020, that would allow us to get up to, say, $60 a barrel in the Brent price. I think we'd really need to see demand roaring back in a way that I think the market is smart enough to be able to say, like, okay, well, the year-on-year comparisons are going to look quite strong, but that's simply because we've had such a catastrophe in Q1 and Q2 2020 that the numbers that we're seeing in the first half of 2021 are a little bit flattered by base effects. So seeing some new source of really kind of organic demand in the oil market will be quite crucial for the prices to be able to get out of the kind of levels that we're at the moment.
Out the regional, local economies, obviously is giving some anecdotal sense there. Do you guys have any particular data on the Dubai outlook, the UAE, the end of year?
Yeah, the numbers that we've seen for Dubai, at least we've had the Dubai Economy Tracker, which is effectively like a PMI for the city coming in. It actually slipped month on month from October to November to 49. So that's below the 50 level. So it would imply a contraction is happening in terms of overall output. I think what's probably a little bit more distressing, at least that we read from it, was the outlook proponent or outlook component of the Dubai Economy Tracker was quite negative as well. Dubai is normally, and UAE is normally a pretty optimistic place. So we have this kind of shift to being a little bit more hesitant, particularly as next year is supposed to be Expo is going to be happening next year, as you know, all the guns are going for it to be happening this year is really driving growth in the city. So having a little bit less of an optimistic outlook for next year, I think, is a little bit concerned about overall economic health in the UAE.
Let's go to the second survey question before we ask our speakers to give us their big picture prognosis for 2021. What will be the big things to watch out for? But we're asking all week this week, what will be the average price of Brent crude oil in 2021? Closer to 40, closer to 50, closer to 60. What will be the average price of Brent crude? And then we'll go to Peter and Ed on their outlook for the year ahead as the final comment of this session. Peter, big picture, Asia, Australia, China, obviously 21. What are your thoughts? What does it look like to you?
Well, Sean, Asia, if we're out of COVID by, say, February, and you've got all of the engagement across the likes of Indonesia, Malaysia, Thailand, and everywhere else as far as vaccines, then I think 21 is going to be a fairly solid year, certainly the second half. And that pent-up demand, I really think it'll come out of the blocks and it'll be, screaming ahead.
I mean, one thing that was noted earlier in the week was by this started with Mike Muller, our regular Sunday commentator, that there's a bullish sentiment right across the commodity complex.
You bet, Sean. The overall, the other side, of course, is that everyone will go into a building process quite simply to get people employed and realize the state of their infrastructure needs to be, turned up and turned up quickly. So I think that cycle is not going to go away, and that's been very evident. I think China takes the lead on it, but everywhere else across Asia will just go through a building, be like a Dubai of, 10 years ago, cranes everywhere and everything will be rebuilt and building. So Australia's concerned, we've got really cheap money. Everywhere's cheap across Asia. And in turn, that's going to really spur things on. Geopolitically with China, that worries me a little bit, Sean. But time will tell whether we kiss and make up, or we draw the daggers and throw at each other's backs.
How much of the market's built in, do you think, for 21 to be that kind of perfect takeoff year? It seems like they've priced the top end of perfect rather than there's going to be some stumbles along the way?
I think that comes down to a few things, politically, whether they're smooth transitions. I'm not just referring to Brexit and Europe or naturally the US, but also the theme across from rolling out of these lockdowns and whether that really gains the momentum that everyone's planning for. Vaccines, lockdowns, everything comes to green light come April, maybe May, booming into that Northern Hemisphere summer, Sean, and just growth again on cheap money. I still don't believe any of the central banks are going to be ratcheting rates up. So we've got a year and a half of cheap money, Sean, 2 years, maybe 3. And
year and a half. We've already had about 10. It is the era of free money. I have a machine in my back garden. I'm printing it. Yeah. Let's get the survey result before giving Ed the last word. Closer to 50. We've had that sentiment all week. There it is again. Ed, your thoughts for the year ahead, and I'd welcome your comment on what is deflation look like? What does it mean? Is it an issue for 21?
Well, I think, simply on base effects alone, considering the enormous drop-off that we've had in demand in 2020, that we'll probably see inflation pick up, at least from 2020 kind of levels when we go into next year. I think what's going to be critical, though, is for central banks to understand, what are they watching? Are they watching a real substantial shift in the economy that portends a complete change in the inflation nature? Or is it just those kind of base effect levels? And I think they probably are going to look quite through it. So we're of the view as well that rates are going nowhere, that accommodative stimulus is going to be in play for a long time. We've got the Fed meeting later this week. We're not expecting anything now, but there is some scope for them to be able to either raise the level of asset purchases that they're doing or target them more specifically to make that sort of cheap money feel even more cheap for a prolonged period. So with that kind of level of support, what we're really wanting to see is the kind of, I think, consumption metrics that Peter has talked about, these kind of infrastructure plans that would allow growth to be at a more sustained level, at least certainly for the second half of 2021. I'm still a little bit skeptical about the kind of consumption rebound, the sort of personal consumption rebound that we might see next year, or it might be really delayed into the final part of 2021. But nevertheless, I think it's pretty clear that things probably can't get as tough as they've been so far this year. So 2021, at least on base effects alone, is shaping up to be a decent number.
But my question on deflation, are we all going to end up like Japan? Is that basically the destination here, that the US and Europe basically look like Japan from now on in of the last 20 years, or do they avoid that fate?
There is a risk there that, the factors that led Japan to have such stagnant growth for so long, sort of an aging workforce, a shrinking population, consumption effectively drying up, they might be at their nascent stages in places like the Eurozone or in the United States, but I think we're still quite early on in that journey. And central bank governors and policymakers will have the case study of having looked at Japan and understanding what went wrong there to try and avoid those mistakes. So really, what I think would have been quite encouraging for 2021 is if we had had a Biden administration, for example, that had a much freer hand to be able to spend on kind of big legacy projects, say green infrastructure or raising minimum wages, or a much more wide-scale infrastructure spending kind of program that they would kind of get the U.S. off of that Japan-style trajectory. We had an agreement last week from the EU for the 2027 budget that looked quite good, but still we want to make sure that policymakers make the right choices to avoid that kind of, not necessarily deflation, but years and years of stagnant sort of 0.5 to 1% growth.
Yeah, I think, again, so much comes down to this election in Georgia. I think if the Republicans take one of those 2 seats, they're just going to frustrate everything. And next year may not be the rocket that, many people are expecting, because I don't think the Republican mood at the moment, if we take anything out of this Trumpian transition, there's a sufficient scale on the right side to just want to be disruptive of everything, and will create alternative realities. But that's one of the things, one of the unknown unknowns, or maybe it's becoming a known unknown, but nonetheless, one of the spoilers perhaps. Ed, Merry Christmas. Thank you so much for being with us all season. Really great. We look forward to having you back in the new year. Peter, have a barbecue Christmas, or whatever the right phrase is down under. Thank you so much for being with us. And of course, you're joining us on January 13th for the forum outlook for the year ahead, where we'll get over 12 hours, a comprehensive look right through from Asia, starting in the morning with Peter in Australia, right through to 12 hours later, Houston and New York. So it'll be a really special day, and we look forward to everybody joining us on that. So thanks, Ed. Thanks, Peter. Have a good day. All the best.
Thank you, Sean. Merry Christmas.
Cheers.